Welcome everyone to the first research webinar from Discover Puerto Rico. I know many of you are accustomed to the industry updates that we provide, and whenever the idea of a research webinar came up, I thought maybe 5 of you would be interested, not 400. So thank you all for your interest today, taking a deep dive into a lot of the numbers that Discover Puerto Rico is looking at as we're making decisions and trying to understand what's happening. We're especially lucky to be joined by 2 of the industry's leading analysts and researchers in the industry. Adam Sachs of Tourism Economics is the world's leading economist when it comes to tourism, and Erin Francis Cummings from Destinations Analysts, who's taken a deep look at what's happening in consumer perception. But first I wanted to let you know that the Q&A is active, and at the end of the presentations we'll be able to review those. So please feel free to ask questions there. And wanted to take a look at some of the pieces, provide an update of some things that you maybe have seen before from Discover Puerto Rico, both in terms of what's happening in performance and the kinds of things that we're looking at as we're moving forward. So let's see. I know this might look very familiar to many of you. We've taken a look at it week over week in our research emails. If you're getting those, hopefully you are. If not, please sign up on the industry portal. But 2020 was shaping up to be a pretty positive year in terms of occupancy, minus the 2 weeks prior to 2 weeks after the earthquakes in January. And that quickly took a dive in March as we started seeing the impacts of COVID-19. Sorry, I'm having some trouble with the slides here, but wanted to provide an update just to show you where we are currently. We've been in the single digits for occupancy, where we'd anticipate being as an island destination that has issued stay-at-home orders early. And anticipate being here for another 4 weeks likely. Of course, that's all dependent on what happens in terms of the islands opening, but then also other communities opening. And how that compares to the rest of the US is especially relevant. We took a faster dive and a deeper dive in occupancy than other destinations. A couple of reasons, as I mentioned, an island destination, we don't have a drive market that might still be traveling, especially given the stay-at-home orders that the government of Puerto Rico, being the first US state or territory to issue such an order, and one of the most stringent, which I think Erin will take us through some things that might in the end show us that consumers would have confidence in destinations that took those kinds of actions. But of course, it's also relevant the kinds of properties we have in Puerto Rico, that we have many luxury and upper upscale properties. These are the kinds of hotels that would typically host meetings and conventions that were some of the first to be impacted by the virus in terms of cancellations. And STR, the world's leading provider of hotel data, has shown that it's the lower class properties, typically those that might be continuing to fuel the supply chain along interstates, and then also properties near healthcare facilities for essential workers that don't want to be near their families during this time. That's driving that continued, occupancy around 22% for the rest of the US. But also wanted to take a look, Adam's going to walk us through some of the pieces related to economic conditions and how it might compare to other events like 9/11 and the 2008 crisis. But certainly in Puerto Rico, the most recent devastating event for us was Hurricane Maria, and taking a look at how that might compare to the current COVID-19 situation. In the 16 months post Hurricane Maria, we ended up losing about 700,000 room nights from the prior year. And that's including rooms that ended up being filled because of relief and recovery efforts. So actually visitor nights was even higher than that. But the 16 months following the initial onset of COVID-19, based off of some of Adam's analysis, we anticipate that being about 3 times the impact as Hurricane Maria. So the kind of impact, of course, is unprecedented, and destinations around the world having to deal with this issue, but certainly crisis communications and management is not new to Puerto Rico, and the resilience of the island and the industry certainly being a strength. So how we're able to respond as a marketing organization is of course dependent on many other factors, but what we can look at right now is current forecasting, and wanted to share with you some of the things that we're taking a look at, specifically in terms of the group and leisure market and what's happening compared to bookings at this same time of year in 2019. So, you know, as would be anticipated, our leisure bookings for every month is down from the prior year. There does appear to be some bright spots in September and October. Many meetings that had canceled in April and May of 2020 immediately postponed and rebooked for that kind of time period, but then also the sales efforts from 2019 placed a lot of meetings in those months. So definitely the group market that's driving that right now for September and October. But in terms of when consumers, leisure consumers are being willing to consider us, it certainly looks like September and October for incoming visitation. And certainly Erin will share, I'm sure, some of the research surrounding the types of trips consumers want to be taking, and those initial months after recovery begins to happen and businesses begin opening are definitely being driven by the local market. And so being able to understand that, you know, these summer months would likely rely on some internal tourism, but then that September time period is when we might anticipate seeing some of the inbound traffic. Another piece that kind of layering onto this in that same sort of message for that September, October timeframe is looking at week over week pickup in these different industries, so business, leisure, and group. Certainly through July, not a lot of positive movement. Again, this is when we would anticipate that internal tourism being especially effective. But then when we start to look at August, we start seeing some pickup in that business market. And the island has so many vendors and government entities that are committed to the island, and would be some of the first that would come back to be able to do their work on the island. So looking like they're considering those for August trips, but then really again that late September, October timeframe for leisure is what's looking encouraging now, and then beyond into November and later months. And you know, this weekly data goes, you know, another 3 months in the future, and February and March of 2021 look especially positive. But in terms of more of the near term, we're definitely looking at that internal market for the next 3 months or so when things open back up. Maybe some of that business travel initially, those vendors that are committed to being in Puerto Rico, and then September being the month that we'd expect some leisure visitation back. And we're getting some validation on this from the airlines. So what this is changes in seat capacity. And this is based off of today versus March 1st. And you can see that we've lost about 1 million seats between April and August, but the airlines have actually added about 500,000 seats for September through December. So that has us down about 530,000 seats, about 13% through the end of the year. But this is certainly a strong signal from the airlines that they expect Q3 and Q4 to be strong for Puerto Rico, and being able to look at especially November and December. And then finally, this is also a piece that you've likely seen from us a few times in terms of we expect there will be a slow return, and China, having had initial cases, being able to take a look at what's been happening there and say what we might expect and how long we might expect to be in this, bottomed out single-digit occupancy place. Again, anticipating another 3 to 4 weeks of that. Then looking for internal tourism. What they've seen in China is that residents are willing to, go out and take shorter weekend trips, and then beyond being able to look at bigger trips, instilling confidence in consumers, especially in their willingness to get on an airplane. And in China, this initial movement of really wanting to get out and move around, they've coined revenge travel, and that followed on the heels of revenge spending, where once the malls opened up in China, that they saw in 4 hours they did as much business as they typically would have done in 2 days. So revenge spending then led into revenge travel, and so hopefully we anticipate seeing that kind of pent-up demand and some of the things that Erin's going to walk us through in terms of consumer sentiment, and understanding that nearly a quarter of consumers want a trip to be one of the first activities that they do once they're allowed to move about freely. And Discover Puerto Rico certainly thinks that our product is well positioned for being able to provide the kinds of experiences that consumers are looking for. Erin, again, will walk us through that, consumers are looking for especially beach activities and experiences that are relatively remote and connecting with nature, the kinds of experiences that Puerto Rico excels in. And while the Discover Puerto Rico brand is based off the culture of the island and would continue to be, this kind of imagery that consumers are looking for, you'll expect to see at the fore of the marketing. And I look forward to being able to share with you the marketing that's planned, and hopefully you'll join us next Friday for the industry update that will walk you through all of those exciting pieces. But what Adam and Erin are going to share with you are really building the backbone for how we plan. So with that, I'm going to turn it over to Adam Sachs. He is the president of Tourism Economics. And Adam not only provides the economic analysis for Discover Puerto Rico and destinations across the world, but also the U.S. Travel Association, the World Travel and Tourism Organization. And again, as the leading researcher in this industry, we're pretty thrilled to have him here today. So thank you, Adam, for being here, and look forward to hearing from you.
Thank you very much, Alicia. Thanks, everyone. I hope everyone is doing well. I know these are difficult times for our industry, and we are working with you, hoping for a quick recovery. I'm going to share with you, from our perspective at Tourism Economics, and also my parent company, Oxford Economics, how we see the global economy taking shape and how we see that affecting travel. So let me start by just sharing with you a couple of things. First of all, we need to understand the effect on the economy right now has everything to do with lockdowns. We're now looking at nearly 70% of the global economy under lockdown right now. And so that puts a major dampener on private consumption, on capital investment, and on trade, with nearly every major economy around the world on some sort of lockdown. And so in the U.S., we're looking at the unemployment rate, touching close to 15% within the month. Today, we reached up to 26 million filings for unemployment. We expect that to go to 30 million before all is said and done. It's interesting to see where those job losses are most severe. They are among hourly workers. And on the right-hand side, you'll see that hourly worker employment has fallen by some 60% in recent weeks. And so with that, the unemployment rate going to about 15%. And so that's going to define the recovery in a lot of ways. To put it in context, the economic impact of this crisis will be much greater than the great financial crisis of 2008 and 2009. So you can see that in the second and third quarters of 2020, both expected global GDP to fall at a greater rate than what we saw during the worst part of the great financial crisis. But, and this is important, we expect the rebound to be stronger than the great financial crisis as well. And there are a couple of reasons for that. One is that the great financial crisis had with it structural debt and financial seizing of markets that affected the recovery for several years. The other is that there's an incredible amount of stimulus that's behind the recovery once it begins. Right now, we're already well over $2 trillion, and around $2.3 trillion in spending authorized by Congress. If you look at the blue steps there, that's everything that was approved by Congress for spending in response to the great financial crisis. And you can see that we're already well past that. We didn't even get to 2 trillion throughout that entire crisis, but we're already at 2.3 trillion. That's going to be a real catalyst to the economic engine as we move into the recovery period, as things begin to open up. So to put this in perspective at a global level, we're looking at a steeper decline. So that's the dark blue line, our current baseline forecast, but also a sharper recovery. And you can see that it drops farther than that red line, which is the great financial crisis, but it comes back quicker as well. And that is the most probable outcome right now. And so for the U.S. economy, we're looking at a GDP drop of some 4% this year, but an increase next year of close to 7%. And that rebound is going to accelerate as we move through the year in 2021. Nevertheless, GDP is still going to be lower than where it would have been. So even with that strong recovery, the economy is still going to be healing through 2022 and 2023 before it actually gets up to its pre-recession trend. And so we're very much looking at a U-shaped recovery. Even with that sharp rebound, you're looking at probably 18 months before we get back up to trend. And the basic narrative behind this forecast is that the gradual relaxing of social distancing really starts to happen in the third quarter of this year. So that'll be in the summer, and then moving into the fourth quarter of this year. And then the return to something that approaches normal in the second half of 2021. So if we can achieve that from a crisis standpoint, we're looking at GDP recovering, beginning to recover in the latter part of 2021. Now, of course, there's plenty of uncertainty to this forecast. We don't purport to know how this crisis is going to unfold. But what this table will tell you is how the U.S. economy is likely to behave depending on different periods of lockdown. So our baseline forecast is for a 10 to 12 week period of lockdown. And that's the fundamental assumption behind that 4% GDP drop. If you extend the lockdown period 15 to 18 weeks, that is a massive impact on the GDP forecast, where it actually winds up being down 8%. if you go to 24 weeks of lockdown, you're looking at a 10% GDP drop, which would be really, really, you know, a devastating blow to the U.S. economy. And so we think it's very unlikely that you'll see anything that extends the lockdown that far, because at that point it starts to become clear that the cure becomes actually more harmful than the disease itself as you begin to move to the right on this table. And this is a picture of just our U.S. forecast. GDP falling sharply in 2020, but increasing sharply in 2021 as stimulus resumes, and as we see pent-up investment and pent-up consumption and pent-up trade begin to really, really pick up as we move into 2021. The U.S. economy, from a travel perspective, is going to get hit, of course, much harder. The impact of this is going to be, we believe, 9 times larger than the impact of 9/11 on the travel industry. So that was about $55 billion lost. We're looking at a $519 billion loss in travel industry spending as a result of COVID-19. We're tracking this weekly now. This is a picture of weekly losses in travel. You can see that percent change, the decline has continued to accelerate week after week. This is on the website of the U.S. Travel Association, so you can find this every Thursday. It gets published for the prior week. And we're looking at losses nearly of $20 billion just last week, with a decline across the U.S. of nearly 90% in travel spending. Now, the good news, if I can couch this a little bit, is that we think this is the worst of it. Our opinion right now is that the data for next week will be slightly better, and that we'll continue to see slight rises as we go from there. When you're looking at percentage losses last week, where were they the worst and where were they the best? Well, markets like Alaska and Arkansas, Mississippi, where very, very remote and also very rural, tend to be performing a bit better than those that either are fly markets or where we're seeing significant outbreaks or urban markets. And you can see that that Puerto Rico, Rhode Island, and Hawaii mark out the top 3 in terms of percentage loss last week. And in terms of, so just the same thing, just highlighting Puerto Rico there. But we think, again, for Puerto Rico, we're likely to see, not going to get any worse than this, and begin to see things begin to trail upward as we go. But we're already at $474 million in losses in travel spending in Puerto Rico right now. Now, this is our forecast, and you can see that we're predicting in every month moving forward improvement. So while April we have down 81%, we expect every month after that to begin to improve as lockdowns begin to abate, and you begin to see a bit of a lifting of some of the social distancing that was most severe in the month of April. So for the U.S., that means a decline of 51% in room demand in 2020, but a big rebound, actually something that looks like an 80% increase in room demand in 2021. Now that's impressive indeed, but to keep in mind that even then we're still below 2019 highs, some 11% lower than we were in 2019 when all is said and done. Rates are also going to be challenged. This is the average daily rate in each year that we're forecasting with STR right now. You can see that we've got rates dropping quite a bit in 2020. The rebound is going to be slower. Rates just take longer to come back, even as occupancies begin to recover. And we see that after every downturn, and I think we'll see it again in this downturn. But here's an important point that I want you to at least take as some encouragement. We're likely to see travel surge once social distancing begins to get lifted. We saw it after SARS. Outbound air passengers, you can see after SARS, really surged in these months afterwards while it was severely depressed here. Now, one of the reasons that I'm particularly positive about Puerto Rico has to do with air service. I was recently on a webinar where I was asked about the Caribbean in general, And one of my biggest concerns for the Caribbean and the recovery is going to be air service, because without the demand, the airlines are going to be slow to bring back air service. Well, Puerto Rico is in a bit of a different position because you have more resident demand for air service that's going to bring flights back that will then provide the air service needed for visitors. And many of your competitors in the Caribbean don't have that. They don't have the residential base that will help to support the return of air service that then would provide access to visitors as well. And so I think that's a decisive advantage of Puerto Rico as we begin to recover. The other thing to note is that it's very, very likely that U.S. international travel is going to be extremely slow to come back. And that means that travel to Europe out of the U.S. is going to be extremely low over the next year to year and a half. There are going to be border closures that are going to come and go. There's going to be reluctance to travel transatlantically as well. Again, it highlights the advantage of Puerto Rico being a U.S. territory, not requiring a passport, and presumably lower risk. So you combine that with the air service benefit, and I think Puerto Rico's positioned to begin to take advantage of this recovery in travel as it happens. But to give you a picture of how this worked out after the last Great Recession, it took about 7 quarters, so nearly 2 years, for room demand to recover to its prior peak. So that's shown here on the left-hand side. So nearly 2 years, 7 quarters for demand to recover. Well, it took 12 quarters, right? So that's 3 years for ADR to recover. So nearly 2 years for demand, nearly 3 years for full rate at hotels to recover. So I think that's something that we can at least look back at as a reference point as we think about the recovery and how the economy may affect things even as the lockdown begins to be released. But just a couple final things to share with you, and then I will hand it over to my friend Aaron. This is research from Longwoods International and Miles Partnership that I think is really helpful. They're releasing this every week. And they're showing that 82% of travelers planning travel in the next 6 months are going to change their travel plans due to coronavirus. But what's interesting is that less than half are canceling it. Most of them are either reducing their travel plans or changing them to a drive or from international to domestic. And so there's still a significant amount of travel on the books. While things look really, they feel really dark right now, keep in mind that there's a significant amount of travel that's still planned and still intending to happen. And the trend has been really encouraging to me. The travelers with travel plans in the next 6 months, you can see that each week since April 1st, that's been increasing. That's the percentage of respondents saying they have travel plans in the next 6 months. So they're not just travel plans that already existed. Households are already beginning to make new travel plans because they are very, very eager to get out again, particularly out of their own houses, but even more than that, to get out and travel. It's interesting also to look at this on a week-by-week basis, and that is you're seeing the pickup there, people changing from international to domestic, and also people traveling, shifting from drive to fly. From fly to drive. So this is my last thing to share with you, and then I'll hand it over to Aaron. Pent-up demand for travel is a real thing. This is their survey data from TripAdvisor, and truly, travelers cannot wait to book their next trip. 82% of the more than 1,000 respondents to their most recent survey said that they're excited to plan their next trip post-COVID-19. 63% have spent time in the last week planning and researching potential trips, and 50% have spent up to 5 hours in the last week planning their next trip. So indeed, travelers are very eager. The state of the economy is going to make that process somewhat slow, but it is inevitable. So final conclusions for you. The economic downturn, expect it to be extremely steep, but also for the bounce to be significant. And then also note that regional markets are likely to pick up first. I think Puerto Rico is going to be a star performer in the Caribbean because of its air service and because of its access to U.S. markets. Group is gonna likely lag leisure because of continued restrictions on large meetings. But I think there is going to be some patience required. While I'm encouraged about where I think the recovery is going to lead us, I also think it's going to take time, and we're likely looking at 2023 before we see levels of demand that matched what we saw in 2019. All right, thank you so much for having me with you. I'll be here for questions at the end as well. So Erin, I'll pass it off to you.
Thank you, Adam. It was fascinating as always. And hello,
Thanks, Adam.
everyone. Oh, go ahead, Alyssa.
No, I was just going to give you an introduction, Erin, that Erin Francis Cummings of Destination Analysts has been a partner for Discover Puerto Rico since our inception. Some of you may have talked with her before the organization began, as they were instrumental in understanding the brand position and how locals and stakeholders wanted the DMO to position itself. And so the work that Destination Analysts has been doing surrounding COVID-19 has become the go-to weekly, up-to-date, and always ready to answer questions specific to Puerto Rico. And so we've really come to rely on her analysis a lot. So thanks, Erin, for walking us through some of the consumer perception pieces.
Yes, I'm happy to be here with all of you to share this week's update on Americans and travel. And I want you to note that the data and findings I'm presenting to you are our independent research, and they are solely designed to provide you unbiased information about how American travelers are thinking and feeling. I have to move through really quickly in the interest of your time, but just put your mind at ease. You will receive these slides, and you can always contact me with any follow-up questions that you have. So let's jump right in here. The data I'll be sharing with you comes from a survey of 1,200 American travelers we have conducted weekly since March 15th. Today, I'll be sharing data collected April 17th through 19th. And to provide a greater context for the findings this week, when the survey was fielded, headlines and conversation began to be dominated by timing on reopening businesses and public spaces and the lifting of shelter-in-place orders. So you will see a number of positive movements in the metrics that I'm about to share. However, I really implore you to keep in mind that in the overall picture, these are nowhere near the levels that we want them to be. So I've been saying lately, like, we are in a Game of Thrones epic or saga, not a simple children's story when it comes to the impact of the novel coronavirus. So let's start with how American travelers have their personal concerns around the virus. Over 85% of American travelers continue to report living in a community with known cases of the virus. American concern about personally contracting the virus inched downward this week. In total, 72.9% of American travelers now say they have some level of concern about contracting the virus, and last week that was at 74%. For the second week in a row, concerns about the health of friends and family contracting the virus dropped slightly, with 79.3% expressing concern for the safety of their loved ones, down from 81.8% last week. And here's the time series of both those personal safety concern metrics. They remain at highly elevated levels, although we are seeing small declines. Concern that the pandemic will impact their personal finances lessened somewhat this week, dropping from 71.9% to 67.6%. And national economic concerns do remain high, so nearly 90% of American travelers expressed some level of concern the virus's impact on the national economy. And here's the time series for the two economic concern metrics. Concern about the virus's impact on personal financial situations, again, remains elevated, but it's the lowest it's been since March 15th. A growing number of American travelers now say they have been taking specific action to try to support local businesses where they live. And in a major shift this week, far fewer travelers feel the coronavirus situation will get worse in the next month. This week, 37.4% said they expect the coronavirus situation in the US to get worse in the next month. That's down sharply from 48.5% just 1 week prior. Expectations of the virus getting worse in the next month, we saw peaked the week of April 5th, but has since declined, while expectations of the situation stabilizing or improving has risen. Again, this week marks a positive turning point in American travelers' expectations for the coronavirus situation. It appears that so far, pessimism around it peaked the week of April 5th and improved since. American travelers mostly remain uncomfortable going out in their own communities to enjoy themselves. However, this week it appears that some comfort is returning. Now 28.4% agree on some level that they feel comfortable about engaging in local activities, up from 21.7% last week. In looking at how Americans perceive the safety of several travel-related activities we are tracking, what this chart is showing you is the percent of American travelers that rate each of these as unsafe to some degree. So across all travelers, cruises and international travel, as well as large events and performances, continue to be perceived as relatively least safe activities at the moment. However, over the last several weeks, the perceived safety of various travel activities has stabilized. And this week, you'll see an orange bar coming through, it has improved. So now the proportion of travelers rating each activity as either somewhat unsafe or very unsafe decreased, and in some cases significantly. So let's now look at the virus's impact on travel behavior as of this week. So as of April 19th, 3/4 of American travelers have had their trips impacted by the coronavirus. Over the last 6 weeks, the proportion of affected travelers has steadily increased. Now, 70% of American travelers have had to cancel trips due to this pandemic. In fact, the proportion of American travelers canceling trips due to the coronavirus has grown from 55% in mid-March to 70.3% this week. Concerns about personal safety continue to top the reasons expressed for why Americans have changed their travel, with almost 2/3 of our survey respondents citing it as a reason. The average American traveler who has canceled a trip says they have done so for 1.9 trips as a result of the outbreak. Similarly, the typical traveler has postponed 1.9 trips due to this crisis. Most trip cancellations are fortunately in the near term, but we do continue to see cancellations of trips that would have taken place this June and July. This week, 68% of travelers who canceled a trip report receiving full refunds. The proportion of travelers being refunded for canceled trip continues to climb. And I wanted to include this because that's good news for the reputation of the travel industry overall. Approximately 7 in 10 American travelers who have postponed a trip due to the pandemic have not yet picked a date for its rescheduling, although 28.8% say they have. And for that smaller proportion who have rescheduled their postponed trip, there appears to be signs of optimism with some increasements in postponements to June and July. So now I'm going to walk you through what we have learned this week about how their American sentiments and perceptions towards travel. So examining the destination brands being associated with coronavirus, New York continues to be the most talked about destination with coronavirus issues. Nearly 90% of Americans identify New York as one of the 3 most talked about places. California, Florida, and New Orleans also top the list, although distantly compared to New York. Now, nearly 8 in 10 American travelers say they are done traveling until they feel the coronavirus situation is over. This sentiment has decreased for the first time in 6 weeks. Last week, more than half strongly agreed with this, and that has dropped this week to 44%. We added a new question in this most recent survey wave about the impact a coronavirus vaccine may have on the openness to travel. In total, 36.5% of American travelers agree to some degree with the notion that they won't be traveling until a COVID-19 vaccine is developed. A similar proportion, however, currently rejects that idea. But Americans continue to miss travel. 70.2% of American travelers agree they can't wait to get out and travel again. And this yearning for travel has changed little in the last month. To look at how travelers fit, or I should say, to look at how travel fits in as a leisure priority after shelter in place is lifted, we posted a question that asked survey respondents to select the top 5 activities they were going to do once those restrictions were lifted. Americans, this is the result of that question, and Americans will seemingly first prioritize their time with friends, particularly out at restaurants, then their personal grooming and shopping. 1 in 5 American travelers said one of the first things they are going to do when shelter-in-place restrictions are lifted is go on a trip. Last week, we asked American travelers to imagine it is sometime later when they first begin feeling it is safe to travel again for leisure, and to describe the places they will visit on that very first trip they're going to take. And fortunately for Puerto Rico, beach destinations and resorts were the clear winner. So this week we asked in an open-ended question, what trip activities American travelers most want to do on their first leisure trip? And Alicia shared this earlier, but again, looks great for Puerto Rico. For their very first trip post-coronavirus, Americans are really interested in relaxation rather than stimulation. So beach topped the list of responses for most desired activities on that first trip. Overall interest levels in taking leisure trips rebounded slightly this week. Now 35.7% of American travelers said they would be excited to take a weekend getaway with a close friend or relative to a place they want to visit in the next month. And looking at the time series for this metric, we see Americans' excitement to travel in the very near future has ticked up in the last 3 weeks. Similarly, travelers' interest in learning about new travel experiences and destinations grew slightly this week. Now over 4 in 10 expressed higher levels of excitement about learning about destinations and travel experiences. And again, openness to travel information has increased in the last 3 weeks. In fact, for the first time since March 15th, the proportion of those who are excited to learn about travel experiences is greater than the proportion who are not excited. However, now even more travelers disagree that the coronavirus situation will be resolved by the summer travel season. In total, 44.5% of Americans disagree that the coronavirus situation will be resolved in the US before summer. 29.8% agree that it will. Looking ahead in the year, about 1/2 of American travelers expect to be back traveling in the fall. And this sentiment has largely remained unchanged in the last 3 weeks. And while the scheduling of leisure trips in April and May has dropped sharply, there are increases on the horizon in the summer and fall months. A little over 1/3 of American travelers say they expect to change the types of travel destinations they choose to visit after the coronavirus situation blows over. This is down from almost 40% who said the same last week. When asked which specific travel behaviors they will likely avoid after the crisis is over, well over half said they would avoid cruises and crowded destinations. Trust that attending meetings in the current environment remains low. 3/4 of travelers say they will be unlikely to attend these types of events until they feel the coronavirus situation is resolved. However, strong agreement with this sentiment has declined slightly this week. Unchanged in the last 5 weeks, 4 in 5 American travelers said they're unlikely to travel outside the US until the coronavirus situation is resolved. While half of American travelers agree that staycations may end up replacing vacations this summer, this sentiment has decreased for the first time in 6 weeks. Car travel may displace some air travel this year, with 40.1% of American travelers saying they may avoid airlines and instead travel by car. This has decreased from 45.4% last week. While the sentiment about replacing air travel with road travel has decreased slightly, agreement about taking more regional trips due to the coronavirus has increased. This week, 50.8% said they'll probably take more regional trips while avoiding long-haul trips. That's up from 47.8% last week. Price cuts and discounts to motivate travel now resonates with over 1 in 3 American travelers. When asked if price cutting made traveling in the next 3 months more interesting, 37.3% now agree, and that's up from 32.9% in 1 week. Big bounce back with baby boomers in this metric this week. And thanks to Discover Puerto Rico, we added questions around American travelers' opinions on mandatory health screenings at airports. First, we asked how travelers generally feel about this and found that over 3/4 feel positively. Then we asked if these screening measures would impact their confidence in traveling to a destination. And again, a majority said they would feel more confident about visiting a destination whose airport had mandatory health screenings. Over 3/4 of American travelers would approve of mandatory health screenings for flights between destinations within the continental US, and a slightly larger proportion would approve of these measures being instituted prior to boarding an airplane. While many of the traveler sentiment metrics we are tracking have improved this week, it still looks that now in the moment is not the time to travel. 2/3 of American travelers currently do not want other travelers coming to visit their community. And very quickly, I will share with you the latest from our travel marketing potential influence calculation. There we go. This is an index we have built based on these 4 data points that we are tracking in this very exceptional environment to look for travel readiness. So in a normal period, we would see the travel readiness curve look something like this, with a majority of American travelers in that ready to travel on the right side of the chart here. So these are mostly people who are ready to travel and that you could market to. But right now, we're seeing most be, and unfortunately, in that left side of the curve. Although we have seen some positive movement in the last week of people moving, inching over to the right. And we track a number of different traveler segments. And so if you have a particular question, Alicia or I can help you find that. But I'm just going to cover a few that we're tracking that I thought might be of interest to you. So millennials right now index highest on travel readiness, but boomers have caught up in the last week, mainly because of lessened concern about personal finances and optimism that the situation will be resolved soon. Men continue to index higher than women in terms of travel readiness. And this week's far more so, and that's primarily because men have lesser personal concerns about the virus and more optimism. Women are more likely to say they are going to change the types of travel destinations they choose to visit post-coronavirus. And travelers in the Midwestern US and travelers in the Southern US index highest for travel readiness, although travelers in the Western US have bounced up in the last week. So yes, positive signs. This story will have a happy ending, but please be cautious. We release these findings every Monday at 8 a.m. Eastern, and you can sign up on our website to make sure that you receive them at that time. Thank you so much.
Thank you, Erin. We have a number of questions that I'd like to work through. Some questions regarding protocols for the airlines, the hotel and cruise industry. Erin, we saw that consumers are interested in seeing those airport health screenings, and that implementing those would instill confidence in the destination. But I'm curious what else you might be hearing from consumers in terms of what they expect to be in place for them to consider travel.
Yeah, so we've done a number of mini focus groups in the last couple weeks, and clearly hearing a distinct desire on what, or a definition, I would say, on what's going to make travelers feel safe. So they are looking at the major hotel brands to do the right thing. And not just hotel, I mean, even attractions like Disneyland. We've heard a lot that they assume that those organizations will do the right thing and only invite visitors back when it is safe. We're also seeing a lot of looking at and trust in government and official organizations. In normal times, we see a lot more trust in the personal network and friends and family, and with this pandemic, we've seen a shift to really looking at official sources, including the DMO, and for information and that sign of, yes, it's okay to come visit our state, our city.
Great. Adam, we have a couple of questions that are raising concerns about the possibility of an increase in cases when things would begin to open up again. I'm curious if any of your modeling and forecasts take into account the possibility of a resurgence later in the year and what that might look like.
We have. So one point of reference would be the grid that I shared, that if we go from a 10 to 12 week lockdown, if that were to be extended to, say, another 6 weeks. So even if that were to just then happen later in the year, that's a significant downward effect on the industry and on the economy. We don't think that we're going to see a lockdown that is as widespread as we see right now, even if we see a second wave in the fall. And that's because a lot of what's happening during this period of time is the building up of medical infrastructure in order to deal with the virus. And so it's very likely, especially given the state of the economy as it'll be recovering, that officials are going to be looking for ways to do more partial lockdowns and regional lockdowns. So what we're seeing right now, as far as virtually, of course there are exceptions, but virtually nationwide lockdown, I would not expect to see that again, even in the case of a second wave. Now, of course, there's still going to be reluctance to travel. That's going to play, especially if we see a significant increase in cases, say in the fall or in the winter months. But I think it remains the biggest risk, right? As we think about the outlook, the risk of things becoming kind of a second wave of crisis. But I think that we can take some comfort in the very strong likelihood that we won't see a lockdown, anything like what we're seeing right now, even in that scenario.
Great. Aaron, Puerto Rico has a robust cruise industry, and you showed that consumers are most reticent to take a cruise in terms of travel. Do you have any additional information on perception of cruises? Is there a timeline for when they might consider, or is it off the table at the moment?
I think, well, first of all, I keep in mind that was across all travelers. So if we look at people who cruised prior to coronavirus, we're not going to see the same fear, likely, the same levels of fear. So do keep that in mind. People who had cruising in their habits before, and I'm not sure what the incidence of the overall traveling population was, but from what I've seen in interviewing travelers, they will likely continue to still consider that or keep on doing that travel behavior as long as they feel that it's safe. And we've seen a lot lately about what the cruise lines are going to institute in terms of more of safety and sanitary measures. And I think, again, because people are looking at companies to do the right thing and putting trust in that, what we hear is like they don't want to get sued, so they're going to do the right thing. I do think that people who had that in their habit will go back to cruising. Now, getting new customers to cruise, that may be more of a challenge than it was pre-COVID-19.
Thank you. And Adam, also the luxury market in Puerto Rico, we have a number of properties serving that audience. Do you have any insight into what that market looks like and how economic conditions might impact that audience?
Yeah, I'm relatively optimistic about the luxury market because if you remember the slide that I showed that looked at the losses in jobs among hourly workers, when you think about that, 26 million going up to 30 million unemployed, that's going to be concentrated among lower income workers. And the reality is that, and we saw this after the great financial crisis as well, is that luxury households are just better positioned to weather a crisis, right? They have savings, they have oftentimes ownership and equity in companies that allows them to withstand drops in cash flow, and so the luxury market is likely to be more stable. It's also reality that luxury properties often are lower density, right? And so they have the ability to implement social distancing and safety measures that, say, a large all-inclusive that's not a luxury property might not have the ability to implement. And so I think on the luxury side, it's likely that you'll see an opportunity there that even leads some of the mid-scale properties. The only thing I would add is that I think price is going to be an issue, right? We saw this after 9/11, where demand came back at a certain price. So there was fear among travelers after 9/11, but what helped people overcome their fear was a good deal. And I think that there's going to be a real factor there as we seek to win travelers back.
Absolutely. And in terms of what Discover Puerto Rico is doing and how we're addressing some of these issues, the research that Erin shared today overall, we're getting that weekly. We're able to segment that by audience and by geography to understand who our best targets are and how we can message to them and when the right timing to message to them is. There's been some questions regarding that timing, that September and October we know to be hurricane season, and we've found that consumers, while typically our lowest period in occupancy, that because cancellation policies are so much more lax right now, that consumers are willing to make that booking knowing that they would have the flexibility that they might not have had previously, and that in that immediate near term, the shorter term travel is in making those quick decisions. So Discover Puerto Rico is looking at all of those pieces and taking into account the things that Adam presented today and Erin, as well as countless other research providers out there. So we've shared with you here on the screen where today's presentation is already housed. I'm happy to accept additional questions via email, and look forward to taking additional suggestions on pieces you'd like Discover Puerto Rico to be looking at. Please do attend our industry update next Friday, May 1st, as the marketing and sales team will share with you what they've been working on and specific plans related to how this research is being taken into account. So thank you all. Thank you, Adam. Thank you, Erin, for joining us today. Appreciate all of your interest in the research that we're looking at. So have a great day.
Thank you. Bye-bye.